Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and today is Wednesday, October 29th, 2025, and yes, it is finally here. It is Fed Day, but here are the things that you need to know, and it's just NVIDIA, NVIDIA, NVIDIA. Do we need to say anything else, really? Microsoft, Meta, Google, they're all reporting after the bell today. Bonds, well, they were a bit higher, keeping yields, 10-year yields below 4%. Oil churns and the dippers are alive and well in gold this morning. And JJ, well, he takes the stage at 2:30 this afternoon. And what do we have for dinner tonight? We're going to have the classic pasta Faggioli, right? It makes you feel good on kind of an unsettled day. So here we go. Stocks once again ended higher. Yet there was a noticeable divergence, and that divergence was driven between big tech and everything else. And you can see it in the indexes. The Dow ended the day higher by 161. The S&P was up 15. The NASDAQ added 190, and the Mag 7 up another 430 points. The losers were the Russell, down 14 points. The transport's down 105 points, and the equal-weighted S&P lost 70 points. Now, this is key. Consider what the market is telling us when the S&P ends the day up 0.25%, yet the equal weight S&P loses 1 full percent. Just to be clear, when we see such a divergence in the S&P versus the equal weight S&P, it suggests extreme concentration in market gains driven almost entirely by a handful of mega cap stocks, while the vast majority of the index, meaning the other stocks, they all lose value. And in fact, we saw that yesterday. The bottom line is this. Gains were not broad-based. They were concentrated in these few tech titans, while the rest of the market was weak and just might be a bit of a warning flag just to proceed with caution. Now, remember when I said all you need is one good headline or one bad headline that causes the algos to focus on anything positive or negative? Well, they chose to focus on the tech positives yesterday, and here they are. And it's mostly all about NVIDIA. Now, NVIDIA had their GTC conference, right, called the Super Bowl of AI in Washington, D.C. That was one positive. And they made a flurry of new announcements. They're collaborating with Oracle to build the Department of Energy's largest AI supercomputer. They announced the first AI native 6G wireless stack built on its Aerial platform. Now, just FYI, a wireless stack is the complete software and hardware architecture that defines the new 6th generation of cellular networks, right? 5G, 6G. It is defined as the brain and nervous system of future wireless networks. They're partnering with Uber to scale and power the next generation of robo-taxis and autonomous fleets. They introduced NVQ Link. It couples quantum computing with GPU computing, accelerating the quantum computing supercomputer. And if that's not enough, they introduced the DGX Spark, a compact AI supercomputer for developers, which will democratize high-performance AI for all global developers. They announced their Omniverse Technologies division is being adopted by leading U.S. manufacturers, software developers, and robotics firms. And they launched Connect X9 Super NIC, a next generation interface card, right? In the end, these announcements emphasize NVIDIA's role in the U.S.'s AI sovereignty, period, the end. And this morning, it's about to become a $5 trillion company. Now, next we heard President Trump. He made some remarks yesterday in South Korea suggesting that he would consider talking to Xi about giving China access to a downgraded version of the NVIDIA flagship Blackwell chip, something that he's done before. But that just was another positive headline. And that sent NVIDIA and other big tech surging even further. And now it is knocking on the door of being that first $5 trillion company ever. It closed last night at 201.03. It needs to kiss and penetrate 205.36 to make history. Just FYI, it's trading at 207.30 in the pre-market, capiche? So consider it done. Third, we're awaiting the earnings from 5 of the Mag 7 over the next 2 days. Now, today it's going to be Microsoft, Meta, and Google after the bell, and then tomorrow it's Apple and Amazon after the bell. And clearly, the excitement is building. And I do not expect any of them to disappoint at all. But truth be told, it's going to be about the guidance, as it always is, and the market is expecting guidance to be robust. Period. The end. Nothing negative about that. And just FYI, of the 29 earnings reports that we got yesterday before the bell, only 3 of them missed. So 89% of the reports yesterday morning beat on the top and bottom lines, and they offered upbeat guidance. So what does that tell you? I'll tell you this, it doesn't scream fire in the hole, but it also doesn't just mean you keep buying haphazardly, right? It becomes very, very strategic. Then at 2 p.m., we're going to hear from the Fed, and there isn't much that JJ can say that's going to change the course of history. Expect to hear him say that they're cutting rates by 25 bips and that they're going to do the same in December. What the market wants to know now is what are they planning on doing in 2026? Now, the market is expecting cuts to continue into the new year. They just want to know when JJ thinks they're going to happen. Will it be January and March, or will it be later like spring, summer? Again, it's all about the guidance, and it is not, JJ is not expected to offer much in terms of clarity. Now, that's all you really need to know about why tech surged, right? But what you also need to consider is why did 8 of the major sectors come under pressure yesterday, right? Real estate taking the biggest hit, down 2.2%. Utilities down 1.6%. Energy and consumer staples down 1%. Industrials down 0.7%. Financials and healthcare down 0.6%. While communications lost 0.5%. And that just might be because they are exhausted and they need to consolidate, and investors just might be taking a little off the top. Something that we have been discussing, and something that should surprise absolutely no one. Now, bonds, they rallied a bit, keeping yields in check. The 10-year remains below 4% at 3.98%, while the 30 is yielding 4.54%. Shorter duration 3 and 6 month bills are yielding 3.69 and 3.6% respectively. But remember, those are annualized rates. So in order to get them, you got to roll them over for a 12-month period to get that rate. Oil trading at $60.30. Again, within that 55-62 trading range. There's nothing new in the oil patch that you don't already know. Yesterday, gold was all over the place. Traded as low as $38.89 in the morning and traded as high as $39.69 in the afternoon, only to close at $39.52. The manic behavior is a direct result of the sell-off that we witnessed over the past week, right, as it tries to find its chi. Now, this morning, the buy the dippers are busy at work, taking gold up $75 to $4,028. Now, news that Russian consumers are hoarding gold is just another reason for the dippers to jump on board after we saw the 12% pullback in a very short period of time. Now, while the bump is nice, my gut says that we're going to test lower before we challenge the highs anytime soon. Now, this morning, U.S. futures are churning higher. Dow futures are up 36, the S&P's up 13, the Nasdaq's up 90, and the Russell is flat. So far, we've already heard from 12 more companies this morning, early this morning. And only 2 of them have disappointed, AVTR and GNRC. They disappointed. And we still have 15 more to go. But let's be honest, all the chatter today is going to be about what we hear tonight after the bell. Not even the Fed, because we already know what that's going to do. European markets this morning are mixed. They too are digesting the latest European earnings season, and they also await today's Fed decision. The S&P closed at 68.90, up 15 points, but not before piercing yet another new century mark. The trade as high as 69.11. And if futures remain positive the way they are, we're going to open in that new century at 9:30. Now, it's going to be interesting to see what happens today. Will we see more divergence or not? Keep your eyes on the equal weight S&P to get a sense of that market move. Now, here's your countdown. It's now 29 days of the government shutdown, and again, no end in sight. There are 0 days until the Fed announces it because it's only hours away now. There's 31 days until official Black Friday hits, 57 days till Christmas, and 63 days until the ball drops in Times Square and we celebrate the new year. Listen, feel free, let me review your plan. Give me a call for a complimentary, no obligation analysis at 561-931-0190. Okay, so what do we have for dinner tonight? Well, you know what? It kind of feels like you need something comforting. So we're going to have pasta Faggioli, which is a classic dish, right? And it's always a family favorite. It's really, pasta Faggioli is essentially just pasta and beans. Anything else that you add to it is just an addition to the basic dish. So if you add sausage to it, that's just an addition. Now for this, you need half a box of elbow pasta, cannelloni beans, water, olive oil, garlic, onion, celery, carrots, a can of crushed plum tomatoes, chicken broth, pancetta, and a Parmigiana cheese rind, and of course salt and pepper. Bring a pot of salted water to a rolling boil, have it on the back burner. Now, in another pot, begin by sauteing some crushed garlic in the olive oil on medium heat. You don't want to burn it. Then you're going to add in the diced pancetta. Don't let, just cook that enough so you get the flavor. Now you're going to add in the diced onions, the carrots, and the celery. Saute that for about 15 minutes. They get nice and soft. Now, in the same pot, you're going to add 2 cans of cannelloni beans. Don't strain them, just the whole thing right out of the can. You're going to add some chicken broth. You're going to add the can of crushed tomatoes. You're going to add 1 can of water. And you're going to add the cheese rind. You're going to season the whole thing with salt and pepper, bring it up to a boil, and then turn the heat down to low and let it just kind of cook on the stove there for a little bit, stirring occasionally. It needs 20 minutes, half an hour. Now, when you're ready, boil the pasta for only 6 minutes. Let it be undercooked. Then you're going to strain it. You're going to add the pasta directly into the sauce because it will continue to cook. If you need to, you're going to add a mug or 2 of the pasta water if the pasta sucks up all the sauce, right? You're only going to need another 3 or 4 minutes to cook because remember, it even cooks when you take it off the heat because it's hot, right? So now, you want to serve this immediately in warm bowls with plenty of fresh grated Parmigiana cheese on the table for your guests. Listen, this is just a feel-good meal, right? Nothing fancy. It's classic, home-cooked Italian food that you would find at Nonna's house when you went over to visit. In any event, it is Wednesday. The sun's just coming up. It's going to be another beautiful day here in South Florida. Until tomorrow, take good care.